I remember myself in 2022 being overwhelmed by all the investment options while my 2 kids were sleeping. I remember how paralyzing it felt looking at all these documents, trying to figure out where to put my hard-earned money. Today I'm going to share something that completely changed my investment journey, and it's understanding ETF fact sheets. But before we dive in, let me tell you something crucial. You don't need 10 different ETFs to start investing. In fact, when I first started rebuilding my financial security after my divorce, I started with just one broad market ETF. And today I'll show you exactly how to read these fact sheets so you can make the first crucial decision with confidence. Think of a fact sheet as the DNA of your ETF. Just like I needed to understand my company's financial statements when running my business, understanding fact sheets became my foundation for smart investing. Let me show you exactly what to look for. So first, let's look at the key identification elements. Every fact sheet starts with these crucial details. The ISIN number is like your ETF passport. It's unique and helps you identify exactly what you're buying. For example, VUAA ISIN is this. This becomes crucial when you are making your purchase because some ETFs might have similar names, similar tickers, but very different characteristics. So next, look to where your ETF is domiciled. For us, Europeans, Irish domiciled ETFs often offer significant tax advantages. That's why you'll see Ireland listed as the domicile for many popular ETFs, just like VWCE or VUAA. One of the most important numbers you'll find is the total expense ratio or TER. When I was starting out, I learned that even small differences in fees can have a huge impact over time. And let's look at some simple, real examples. VUAA has a total expense ratio of 0.07. The other ones are listed right here. These might seem like tiny numbers, but here's what they mean in real money. From every 10,000 investment, you are paying €7 per year with VUAA. The fact sheet, you will see it as ongoing charges figure, €22 per year with VWCE. And again, here it's ongoing charges figure. And then €15 per year with QDVE. Now let's look at what you actually own when you buy an ETF. This was a game changer for me, understanding that buying one ETF could give me ownership in hundreds or even thousands of companies. Let's take VWCE as an example. When you buy this ETF, you are getting exposure to over 3,500 companies across both developed and emerging markets. Compare this to VUAA, which focuses on the top 500 US companies, or QDVE, which specifically targets technology companies. Looking at the top holdings tells you where most of your money is going. For instance, in QDVE, more than 22% is in Apple, 17% is in Microsoft, and 16% is in Nvidia. This kind of information helps you understand your investment concentration and make sure it aligns with your goals. And then understanding performance data is crucial. But remember, past performance doesn't guarantee you the future results. So let's look at how to read these numbers. YTD, year to date. How the fund is performing this year, 1 year, 3-year and 5-year returns. Longer term performance perspective. Comparison to benchmark. How well the ETF tracks its index. What's fascinating here is seeing how different types of ETFs perform in various market conditions. This becomes especially important when we talk about different ETF structures, which, by the way, is exactly what we're going to cover next week when we dive into leveraged ETFs, synthetic ETFs, and the crucial difference between accumulating and distributing ETFs. Let me show you exactly how I use this information to make decisions. When choosing on your first ETF, try and focus on these key elements. So the first one is broad market exposure. Second, low cost. Third, UCITS compliance. And fourth, it's accumulating versus distributing structure. We'll dive deep into this in 2 weeks. Remember, starting with one well-chosen, broad market ETF is perfectly fine. In fact, it's often better than trying to juggle multiple ETFs when you are beginning. Whether you choose VWCE for global exposure or VUAA for S&P 500 exposure, what matters is getting started with something you understand. Let me show you something real. This is my actual investment portfolio where I'm investing €100 every month into VUAA. As you can see, I've already built up to €1,300 with a return of more than 9% over the period. But what's more important than the returns is the consistency. Every single month, I invest regardless of what the market is doing. Some months the price is higher, some months it's lower, but I keep investing the same amount. This is called dollar cost averaging, or in our case, euro cost averaging, and it's one of the smartest ways to build wealth over time. As you can see, 93% of my portfolio is just one ETF. And this isn't just theory, this is my real money invested exactly in how I talk. No timing the market, no complex strategies, just consistent monthly investments into a solid ETF. Look at this chart. You can see every monthly investment adding up over time. Some months were up, some were down, but the overall trend is what matters. This is exactly what long-term investing looks like in real life. Subscribe to my portfolio with the link below. I use Freedom24 as my main active broker, so if you want to follow my money, you will be asked to go through the registration process, but will not be obliged to start investing yourself if you only want to learn and understand first. So follow my journey and see real monthly updates on my €100 investments, how the portfolio performs in different market conditions, and exactly how I implement everything about what I talk. I know how overwhelming this can feel. I was there, trying to make smart financial decisions while juggling work and family responsibilities. Here's what I want you to take away from today. You don't need to complicate things. Start with one broad market ETF that you understand. Use the checklist I've created for you to analyze and to learn about its fact sheet and to make your decision with confidence. In 2 weeks, we're going to dive into something really exciting: the different types of ETFs available to us European investors. We'll explore leveraged ETFs, synthetic ETFs, and most importantly, understand the crucial difference between accumulating and distributing. This knowledge will help you make even more informed decisions as you grow your investment portfolio. Until then, download my fact sheet checklist below, and remember, sometimes the simplest approach is the smartest one. Bye!